Hello everyone, thanks for joining me again, really appreciate that. My name's Anthony Beardsall, I'm a trading coach and a trader, and I'm going to talk you through a trade today that, I sort of predicted, if you like, in the last video that I did. So when I say sort of predicted it, I said if the candle finishes, the daily candle finishes like this, then there'd be a possibility of a good trade. And I'm going to show you the results of what happened, basically, so that you can start to learn. The more of these that you see, the more familiar you'll get. And it's like practicing playing football or practicing, doing something complicated involves practice if you want to do it effectively. Trading especially is complicated and intricate, and you need to practice. So this will help reinforce what I talked about last time, and it'll show you the opportunities that exist for making money in these markets when you read price action. My system that I use is I call it Ant's Gold trading system. And it's, I find it fantastic, and I'm able to explain it to people really well. And I think that's valuable. So I'm going to talk you through this trade now. And what I want to do first of all is I want to just show you the clip of the video that I posted last that shows you where price was, the candlestick that was developing, and what may happen next. Don't forget, the river of value is like a magnet to price. It's a magnet. It can't vary price too far from value. It keeps going back because traders are constantly seeing if there is a disparity between value and momentum and price. And when there is a gap, it often gets closed quite quickly. And sometimes it triggers a reversal. Sometimes it just triggers a move back to value, and they're tradable. And I'm going to show you what happened in the last video, and then I'm going to show you what happened next. So let's have a look at what was going on the daily, what's been going on the daily chart. You can see here that we've been in a downtrend. Price has been going down, hitting the river of value and going down. And this is today's candlestick, just right at the bottom here. It's beginning to look a little bit like one of those long-legged doji candlesticks, isn't it? With the high way away from this river of value. Plenty of time left in the day yet, but we are late afternoon in the UK now, and so, that might be a good signal. Right, I'm back with you in real time, and here we were. So let's have a look at what we've got. This is how the candle finished. So you can see that at this time, no little green on the candlestick. And then this is how it closed. So at its highest, the candlestick was 33,158. At its lowest, 32,812. Okay. So there are 346 points between the high and the low. And the tail, which is this bit here, was 179 points. So the tail is 52% of the size of, or the range of the bar, which is just perfect. And the 8 EMA is right up here at 33,439. So a big gap, and that's, from where it finishes here up to the 8 EMA is what I'm looking to potentially trade. And we'll see what happens next. But you've got everything. This is the time, midnight on this particular day. And because it's a futures market, probably work 12 to 12 for you. And that's a 24-hour period. So that's a 24-hour or a daily candlestick. And we're about to get another one. And so you've got all the information on there that you need in order to trade. And that's the time to go in for this particular trade. You either wait for the next candlestick to go green or you go in straight away. But this is, this is a bona fide Ants gold trading system trade. So there you go. And of course, you've got to have a good risk and reward ratio. So the target or the reward that I'm looking for is 384 points. That's from here up to the 8 EMA. And the risk is 179 points. Just go through that. So the tail is 179 points. The risk is 170. It's actually 181 probably by the time you've allowed for, any problems with it coming down and the charges that are involved in the trade. But, you can see that there's a great risk reward ratio on here, 2.1 reward for 1 of risk, and that's the sort of trade that I look for. These trades take place on the 1 minute, the 5 minute, the 30 minute, the 2 hour, the 4 hour, and the daily and monthly and weekly charts. All of them. The charts and markets work in the same way on all time frames. Don't let anybody tell you otherwise. And when there's a good trade, there's a good trade. So let's have a look and see what happened next. So that was the candlestick. We're looking to enter after that candlestick. So here you had a day, I think this was Thursday last week. You had a day where it didn't do a lot, went up a bit, but the trade is up here. So came down to within, a good number of points really, but it looks quite close to the stop, which was down here. But you can see there's a gap. And then the market got dragged up into the river of value. And that was where the ATMA was. And you can see that that's almost exactly where the price finished, the candlestick finished at the previous level. And there's no, it's not fluke that this is the case. It's because people started taking their profits from this daily trade. The traders who traded this took profits up here, and that, the selling that was involved in that brought markets down. And so that was obviously that looks like a great trade, and it was. And if you took this trade 9 times on the trot, 20 times on the trot, 50 times on the trot, you'd have a superb win to loss ratio on this type of trade. I haven't shown you all the signals in here because you've got context, candlestick way below the river of value, content, nice candlestick, and it's a doji with a 50% tail plus tail on it. And you'd be looking for some sort of other confluence, like maybe the monthly chart starting to turn up, or some sort of divergence in there. Just for confluence, added confluence. They're the 3 C's: context, content, and confluence. And when you've got all 3, you've got a good opportunity. A very high proportion of these trades come off and work. So that was the trade. Now, where alternatives to your entry criteria. Let's have a look. This is the 4-hour chart, and you can see that almost all of the gain was made in a 4-hour period on Friday. Almost all of it. Absolutely fantastic. And again, what you've got is you've got another one of these candlesticks, but this one is actually a pin bar candlestick, and you can see a tiny tail on the bottom of this candlestick. That was fantastic. It went red, almost immediately green, and you can enter there for probably 20-1 reward to risk, based on the fact that you already know here, you knew that you wanted, the price was going to go up. So with the daily trades, you had to wait for an additional day. With this trade, ready to pounce. This was a great signal, and big long tail, red body coming down. This is on the 2-hour chart, which provides another alternative. You can see that the trade took place within here. And this is the 30-minute chart. And on the 30-minute chart, oh, hello. There's another one of those candlesticks down the bottom. This is a pin bar doji, and there's a big gap here. This is 30-minute chart. Unbelievably similar, isn't it, to the daily chart? And you've got one of these pin bar candlesticks, dojis, massive long tail, very small body, gap between the high and the river of value, and price shot through and then just carried on up with a nice little bounce down here as it approached value. But this was the target, and there you go. So the 30-minute chart, just to show you these other factors that I look for, that are confluence here. You can see in here there's a divergence. One divergence is here. This is a stochastic indicator, general standard settings. Price comes down into the oversold area here, minus less than 20%, and price comes down, makes a low. Not much of a low up there. Anyway, when it comes back down again here, makes a price lower low, but an indicator higher low. And then within here, you've got the pin bar candlestick, gap, and then price goes through. So there's a shorter term trade there, and there you go. So it's that's what I was just saying. You've got your divergence in the indicator, you've got your content signal, and you've got your context because it's below the river of value, and therefore you have your trade. So that was a superb trade, really good, risk to reward. There aren't many places where you can take a very small risk with high probability for a great reward. And it's up to you which chart you trade. If you don't want to spend all day looking at charts, then once a day onto the daily time frame, once a week onto the weekly, once a month onto the monthly. You've got hundreds of different charts, markets, all in different positions. The opportunities here are almost limitless. And 384 points in 2 days, that's gonna do your bank account loads of good if you can make that every couple of days, even at a couple of pounds a point or a couple of dollars a point. That's really good money, isn't it? My name's Anthony Bidsall. I hope that you've enjoyed this, and do ask any questions using the comment box below. Do subscribe to the channel for more videos like this, and I look forward to seeing you on the next one. Bye for now.